What's going on, everyone? All right, so we have the preliminary proxy statement out from GameStop. It just came out a few minutes ago. This will give us some more insight on the split announcement that we had the other day, as well as an insight into their 2022 incentive plan. So let's go ahead and take a look and see what the company is up to. So 2022 proxy statement, notice of 2022 annual meeting of stockholders to be held on June, and then it doesn't give a date. I'm assuming that's because they have not established a set date yet, but if I had to guess, it would be June 9th. Now, this is the notice here. It says, "Dear stockholder, we invite you to attend our annual meeting of stockholders." Basically, I'm just going to read you the 6 proposals that they have laid out. They are, number 1, to elect 6 directors, each to serve as a member of the board of directors until the next annual meeting and until such director's successor is elected and qualified. 2, adopt and approve the GameStop 2022 incentive plan, which is basically going to give us more details about their outlook for this coming year. Number 3, we have provide an advisory non-binding vote on the compensation of our named executive officers. Number 4, ratify our audit committee's appointment of Deloitte & Touche, I don't know how to say it, I'm an idiot, LLP as our independent registered public accounting firm for our fiscal year ending January 28th, 2023. Approve an amendment to our third amended and restated certificate of incorporation to increase the number of authorized shares of Class A common stock to 1 billion, which is another important factor in this document here. And then lastly, we have the transact such other business, if any, as many properly come before the annual meeting and at any postponement or adjournment of the annual meeting. So this is the plan they were referring to. We got a brief touch on this in the latest announcement regarding the split. Overview of this is Proposal 2. On March 31st, 2022, the Compensation Committee and the Board approved, subject to the approval of the company stockholders at the annual meeting, the 2022 Incentive Plan, otherwise referred to as the 2022 Plan. This plan, if approved, will replace the current plan, which is the 2019 Incentive Plan. Our principal reason for implementing the 2022 plan is to support future compensatory equity issuances. If the 2022 plan is approved by stockholders, 8 million shares of common stock plus any shares subject to the 2019 plan awards that expire are forfeited, canceled, terminated, or settled in cash after the 2022 plan is effective will be available for issuance. So saying basically there's 8 million right now, plus any shares that are subject to expiry, forfeited, canceled, terminated that were in the previous plan. Anything that falls under those terms will be carried over to this plan. So if this plan is approved by stockholders, no additional awards will be made pursuant to the 2019 plan. If this proposal is not approved by our stockholders, the 2022 plan will not become effective and the 2019 plan will remain in effect in accordance with its present terms, which has an expiration date of June 25th, 2029. Now, this is why they think you should vote on it. It basically authorizes the Compensation Committee to provide equity-based compensation in the form of stock options, stock appreciation rights, restricted stock units, performance awards, and other share-based awards for the purpose of providing officers, employees, consultants, advisors, and directors of the company and affiliates with incentives and rewards for performance. We believe our future success depends in part on our ability to attract, motivate, and retain high-quality officers, employees, consultants, advisors, and directors, and that the ability to provide equity-based awards under the 2022 plan is critical to achieve this success. So basically, 2022 plan, it's going to be a compensation agreement for their executives, replacing the previous plan. If this is not approved, it may jeopardize the Compensation Committee's ability to achieve these objectives. We believe that we would be at a significant competitive disadvantage if we could not use equity-based awards to recruit and compensate high-performing individuals based on the fact that equity-based awards are a critical component of our new compensation structure and are a key design feature of the compensation programs of our competitors. The use of equity as part of our compensation program is also important to our continued success as it aligns the interest of our officers, employees, and directors and other guarantees or grantees with the interest of our stockholders and promotes a focus on long-term value creation. Again, this is a long-term play. And what I'm searching for here is any indication at all that there's any reason to get excited before 2023 when originally outlined by the chairman, Ryan Cohen. In addition, the 2022 plan will allow us to continue to provide a means whereby those individuals who have responsibility for the successful administration and management of the company can acquire and maintain ownership of shares of common stock thereby strengthening their interest in the welfare of the company. In addition, as described in our compensation discussion and analysis, the Compensation Committee adopted a new compensation structure whereby a significant portion of the compensation of our NEOs and senior level employees are to be delivered through the use of equity, with significantly reduced cash compensation levels versus our legacy approach to executive and employee compensation. This approach creates direct alignment between the interests of our stockholders with the interests of our executives. The 2022 plan helps to ensure that the Compensation Committee has adequate shares available to meet our compensation objectives under this new structure in all stock price environments. Furthermore, the 2022 plan will ensure we can continue to attract the executive talent necessary to execute upon our digital strategy and transformation of our business. So again, important things to take from this. This is for the executives, and it's for the shareholders. It's for both. Now, the compensation is going to the shareholders, or the directors and members of the company, but that will better align the interest with the shareholders. So again, long-term play here. In 2023, I'm thinking. So this is the dilution and overhang numbers, or overhang numbers for the previous 3 fiscal years. You have an annual burn rate, a year-end dilution rate, and a year-end overhang, and then you have 3 super notes. Each one of these describes how this is calculated. The annual burn rate is calculated by dividing the number of shares underlying stock awards and stock options granted during each respective fiscal year by the weighted average number of shares outstanding. The year-end dilution is calculated by dividing the number of shares underlying stock awards and stock options by the sum of the common shares outstanding at each respective fiscal year end plus the numerator. And then lastly, you have year-end overhang, which is calculated by dividing the number of shares, stock options, and awards by the sum of common shares outstanding at each respective fiscal year end plus the numerator. So basically, the summary of their material features of the 2022 plan eligibility. It provides for the grant of equity awards, again, to officers, employees, consultants, advisors, and directors of the company, our subsidiaries and affiliates selected from time to time by our Compensation Committee. The Compensation Committee will determine in its sole and absolute discretion the specific individuals eligible to participate in the plan. As of April 8th, we had approximately 26,000 employees and 5 directors. Depending on the time of year, number of other employees fluctuates significantly due to the seasonality of our business. So basically, it's just repeating everything that we were telling you before. This is where it gets important. The shares available, subject to the adjustment provisions, the total number of shares that may be issued is 8 million. So that's how many shares they can offer out in the open market. Upon the approval of the 2022 plan, no further awards will be granted under the 19 plan. Shares subject to awards, including 2019 plan awards that expire, or forfeited or canceled, will be added on to that 8 million, just like they mentioned before. And then we have Proposal 5, which is an approval of amendment to our Certificate of Incorporation to increase the authorized shares. And basically, they go into more detail here. They're basically asking stockholders to approve the amendment to our third amended and restated certificate to increase the authorized shares of common stock to 1 billion. And correspondingly increase the number of authorized shares of all classes of our stock to 1,005 million in order to implement a stock split of our common stock in the form of a stock dividend, stock split, and provide flexibility for future corporate needs. So basically, there you go. They're going to do a stock split, but in the form of a dividend. That's a curveball. Did not expect that. I'm not sure the ramifications of it. I don't think anything substantial is going to come from it because, again, this is a long-term thing. 2023 was stated by the company. It still looks to be on track for that time frame because, again, they need capital. They need to get their executives where they want to stay in the company, and that's what they're going to be working on this year is their equity compensation. So hang in there. Keep waiting. It's coming, but just a little bit too soon. As of April 8th, 76,347,215 shares of common stock were issued and outstanding. That will not change. Now, that could go up by 8 million, but increasing authorized shares doesn't increase the amount of shares issued. This is going to increase the amount of shares they are able to issue in the future. Now, it says here the primary purpose of increasing the number of authorized shares of our common stock is to facilitate the potential stock split. Our board intends to approve the stock split subject to and contingent upon the stockholder approval and the effectiveness of the authorized shares amendment. The trading price of our common stock has risen significantly over the past couple of years. Our investors have expressed a high level of interest in our common stock. Feedback from our investors indicates that a higher stock price can limit those who desire to invest in our common stock. We anticipate that an increase in the number of outstanding shares resulting from a potential stock split will reset the market price of our common stock in a range that would give our investors more flexibility in how they manage their ownership of our common stock and make our common stock more accessible for anyone who wants to invest in our company, which is what we all thought was going to happen in the first place. The only curveball was throwing in the dividend with it and increasing their authorized shares by this much. A proportional increase in our authorized but unissued shares of common stock as a result of the authorized shares amendment would also have the additional benefit of enabling the board to issue additional shares of common stock. So again, the additional benefit is for the board to issue additional shares. And when you issue additional shares, you want to raise capital, which is what they're going to be doing. They need money. The corporate purpose for which our board may issue additional shares of common stock include future acquisitions, capital raising for financing transactions involving common stock, convertible securities or other equity securities, stock splits, stock dividends, and current or future equity compensation plans. Our board believes the proportionate increase in our authorized but unissued common stock is appropriate to maintain the flexibility currently available to us to issue shares in the future without the potential expense or delay incident to obtaining stockholder approval. So again, they're telling you right here that if this is approved, they can issue more shares later without the approval of shareholders. It is what it is. Now, except for shares of common stock reserved for grants pursuant to our equity compensation plan and shares of common stock expected to be distributed to stockholders to effect the planned stock split, we do not currently have any other plans, agreements, commitments, or understandings with respect to the issuance of additional shares or the currently authorized but unissued shares of common stock, nor do we currently have any plans, arrangements, commitments, or understandings with respect to the issuance of any shares of preferred stock. So they're saying right now, as far as they know right now, they're not going to be issuing any more shares, but that could change anytime. Let's see here. The availability of additional authorized but unissued shares of common stock may enable our board to render it more difficult or discourage an attempt to obtain control of the company, which may adversely affect the market price of our common stock. If in the due exercise of its fiduciary obligations, for example, our board were to determine that a takeover proposal were not in our best interests, such shares could be issued by the board without stockholder approval in one or more private placements or other transactions that might prevent, render more difficult, or make more costly the completion of any attempted takeover transaction by diluting voting or other rights of the proposed acquirer or insurgent stockholder group, or creating a substantial voting block in institutional or other hands that might support the position of the incumbent board, or 2, an acquisition that might complicate or preclude the takeover. This proposal is not prompted by any specific effort or takeover threat currently perceived by management. The effective date, it will become effective on the date the certificate of amendment is filed with the SEC. The reservation of right to abandon authorized shares amendment and stock split, they're just saying at any time they can drop this proposal. If the board elects to abandon the authorized shares amendment, the number of authorized common stock will remain at 300 million, and the stock split will not be affected. Additionally, our board reserves the right to not proceed with the stock split at all, even if this proposal is approved by our stockholders. So again, the possibility remains that you could increase the amount of shares or vote on this to happen, and the split could still not happen. So again, that's basically it. It is what it is. Again, like he's been saying this whole time, they have to get out of the hole they're in, and it's going to take some time. I fully believe that 2023 is the year. Not this year, it's 2022. So next year. But that's basically the sum of this. I'll link it below so you can take a look. And yeah, y'all have a good one. Go GameStop.